Okay, so you've seen the headlines. They're all screaming about conflict in the Middle East, and the stock market is, well, it's going a little haywire. But what's the real story there? What's the actual connection? Today, we are going to cut right through all that noise and get to the heart of something that's as much about human psychology as it is about politics.
Wow, that's a pretty bold claim to start with, isn't it? But it gets right to the point. See, this isn't about having some secret insider information or being a foreign policy expert. What this slide is really saying is that when a market is freaking out, the biggest advantage you can have is just to keep your cool. It's about being the one who refuses to panic.
So, to unpack all of this, let's start with something really simple. I want you to forget geopolitics, forget oil, forget stocks for just a second. Let's talk about bananas, specifically the world's banana bridge. Now, in our little analogy here, the most important resource in the entire world isn't oil, it's bananas. Think of them as everything. They're food, they're power, they're what you need for survival. Bananas are what make the whole jungle economy go round.
Okay, picture this in your head. All the jungles everywhere are producing these bananas, but a massive chunk of them, a really critical amount, has to travel over one single narrow bridge to get to everybody else. So you can see how whoever controls that bridge, well, they control the flow of bananas, right?
And this is where our analogy slams into reality. That banana bridge we were talking about, it's real. It's called the Strait of Hormuz, and that single tiny waterway controls a staggering 20%, that's 1/5 of the entire planet's oil supply. It is, without a doubt, the world's most critical choke point.
So, what happens when there's trouble at this all-important bridge? You guessed it. A threat here doesn't just stay put. It kicks off this massive domino effect that ripples across the entire global economy. Let's break down exactly how that works.
But first, before we get into the mechanics, you have to understand the one emotion that really drives financial markets. It's not greed, it's not even fear, really. It's the unknown. Markets can deal with good news, they can price in bad news, but the one thing they absolutely hate is uncertainty.
And here is that chain reaction laid out step by step. First, you get the geopolitical threat right near our banana bridge. That uncertainty immediately makes the price of oil spike. Why? Because people are scared the supply will get cut off. Then, higher oil prices mean it costs more for literally almost every company on Earth to do business. Shipping costs go up, manufacturing costs go up, you name it. And when costs go up, what happens to profits? They go down, and so do stock prices. It's a totally predictable cascade.
But here's the thing. The market isn't just a machine with inputs and outputs. It's run by people, by us. And that means the most important part of this whole story isn't what's happening on the outside. It's the battle going on inside our own heads that really decides who wins and who loses.
This right here is such a critical idea. The biggest financial hits people take don't usually come from the conflict itself, they come from our reaction to it. The real enemy to your bank account isn't a missile, it's your own panic.
And here's what that panic actually looks like in real time. A breaking news alert pops up on your phone. Bam! Your ancient, primitive brain takes over. That fight-or-flight response just shuts down all your rational thought. You're not thinking anymore, you're just reacting. And you start selling off perfectly good assets for way less than they're worth. All for that temporary, fleeting feeling of being safe. You know, every single crisis splits the market into two distinct groups. It's just like you see here. On one side, you've got the panicked herd. They're glued to the headlines, driven by emotion and selling at a loss. But on the other side, you have the patient investor, the smart money. They don't react, they watch. They use logic, not fear.
And here it is. This is the whole secret. One person's panic is another person's golden opportunity. Smart money knows that when people sell out of fear, they create huge discounts on great companies. So while the herd is desperately trying to get out cheap, the patient investor is quietly swooping in and buying even cheaper.
So this brings us to the final choice, doesn't it? Let's take everything we've just talked about and boil it down to one simple rule you can use the next time this happens. And believe me, it will happen again.
Look, if you remember only one thing from all of this, let it be this simple seesaw. When the news is full of fear about conflict, the market usually goes down. But when the headlines start talking about hope for peace or de-escalation, the market tends to rocket right back up. It's a predictable rhythm. And this isn't some complex, secret financial formula. It's not magic. It's just human psychology. It's the same pattern of fear and relief playing out on a massive global scale again and again and again throughout history. Which leads us to the final and most important question. The next time the headlines are screaming and you see the market charts turning bright red, what are you going to do? Are you going to join the panicked herd? Or are you going to be one of the people who's prepared?
Because at the end of the day, the jungle and the stock market, they don't care about our feelings. In every crisis, the tree gets shaken hard. Some people run away screaming, while others calmly wait and pick up all the good fruit that falls to the ground. The choice is always yours. Stay calm and think